Hello and welcome to Commodity Champions. I'm Anuj Gupta, and the oil prices surged a whopping 8% in early trade following the surprise announcement by OPEC Plus to cut production by 1.16 million barrels per day. The move is a precautionary measure aimed at supporting oil market stability. The voluntary cuts will start in the month of May and continue till end of 2023. The move came in on the back of Russia's decision to trim oil production by 500,000 barrels per day till the end of this year. Now, the total volume cut by OPEC Plus and its allies comes to 3.66 million barrels per day, which is equal to the global demand of 3.7%. Joining me now to discuss more about the crude price trajectory and the outlook is Anuj Gupta. He's Vice President at IIFL Securities. Naveen Mathur is Director at Commodities and Currencies at Anand Rathi. And Pritam Patnaik is Head of Commodities at Axis Securities. Also joining us in a bit is Kunal Shah, Head of Commodities and Currencies at Nirmal Bang. Gentlemen, hi, thank you so much for joining us. And what a start to the month of April, where we are looking at a big, huge jump for the crude oil prices. I'll come to you first, Pritam. What is your sense? I mean, we've seen a big gap up. I mean, this is not something that we anticipated in the last week. Markets did think that you wouldn't see OPEC do much. It would be perhaps in the June meeting that they would cut output, something that the markets were factoring in, but a big cut and a surprise one at that.
I agree with you, Manisha. I wish I was in the boardroom where the decision was taken, and it will be interesting to see what was the treasury positions that these guys took. But, Manisha, this is widely expected. I think OPEC has become more and more inelastic to a natural demand formation. I think on and off, whenever they are pushed to a corner, they take very, very stringent and rigid decisions. And this is one of those examples of that only. But it kind of confirms to say that the demand for crude was really, really slipping. Okay, we had expected with China opening up, the demand would kind of soar up a little bit. But clearly inflation has had its impact, and the economic impact of that slowdown is showing slowly and steadily. So my sense is that this is slightly a desperate move by the OPEC nations to try and get a support for the oil prices. But I think that in some time it could be counterproductive, because eventually the inflationary trend which started was aided thanks to the oil prices, rising oil prices because of the Ukraine war. And that is not stemming now. With this coming into place, the inflation is going to stay a little more sticky in the system, and that could impact further interest rate hike decisions by central bank, and that could be counterproductive for crude oil. That said, in the short term, obviously there's going to be a positive impact on crude prices, with about 1 million barrels being shaved off from the production. So I sense that in the near to medium terms, we could see a little bit of rise in the crude oil prices. But like I said, in the long term, it's going to be counterproductive, because it's going to have an impact on inflation that could lead to higher interest rates, and then further putting the global economy into recessionary trend.
All right. Naveen, what is your sense? Because we've seen a low of $70 and a high of $88 in the previous quarter. With what the OPEC has done in this week now, how are you looking at the crude prices ranging for the month of April or for this quarter?
Good afternoon, Manisha, and good afternoon to all the viewers on the show, along with my colleagues who are part of this particular panel, Manisha. I think what Pritam just said makes some sense out of it. I think the kind of a surprise move by OPEC of cutting down the production output at around 1.16 million barrels over and above the 2 million barrels cut earlier. I think that's a very promising stuff for the crude oil price. It may not be the promising stuff for the inflationary part of it. But as far as the prices are concerned, you are absolutely right that we have seen the prices touching the lows of around $70. Mind you that after the Ukraine invasion by Russia, we did saw the prices moving up to an extent of $130 a barrel too. So I'm quite optimistic in terms of the prices going up from the lows of 70s. We are anyway close to $85 levels on the crude. I think with the China opening up the economy, I think both the energy segment and the industrial segment look good, and particularly with the OPEC cut further, we think that the markets need to be on the upside. But I wouldn't think so that markets would move beyond 90 or 95.
Okay.
I think 90 or 95, they should stabilize once this news is getting discounted into the prices. So I think overall trend, therefore, slightly bullish to an extent of around $85 to $90 for the WTI.
Fair point that. Anuj, what is your sense? Because what the OPEC has done has been a surprise move. We've seen a knee-jerk reaction. There are reports on how the money managers also perhaps were short. So we did see that short covering. They clearly did not get a chance to do that. It was a gap-up opening because of that one reason. Do you think now you will see market going long on crude as well?
Manisha, good afternoon. See, today is the first trading day of the April 2023, and today we saw almost 6% kind of upside momentum in crude oil prices. If you check last year when it touched the high of $138 per barrel, and right now March 2023, it was around $70. Almost 50% kind of correction we saw in crude oil prices from last year, and also we have seen a huge demand, lower demand from the China. So I would like to share one important data which comes from the electric vehicles. In this year, we have seen that General Motors delivers 39,000 EVs, and Tesla also delivered 1.39 million EVs. So there is the concern from EVs also, because the sales of EVs is also increasing. So there is a demand concern from the crude oil side, because there is no concern about the inflation, but the concern is the only demand of the crude oil. That's why OPEC plus members cut down the production in this last Sunday. So my concern is that if prices will trade between $83 to $90, so that is there is no major impact on the global economy. But if price increase from the $90, so there will be chance to the consuming country like India and China, definitely they will see a big issue towards the conflation. So, but as per this, the current step taken by the OPEC plus member, definitely prices will go upside and it may test $90 to $95. $100 would be, I think we can say that this is the global, above $100 would be the global concern. Again, we'll see. And this would be a major concern for the coming, might be inflation on a higher side. So, okay. But on the price side, I am expecting that it may test $90 in a very soon.
All right. Well, yes, most banks and brokerages believe that $80 to $90 is where the crude oil prices could stay. You could see 70, you could see 100 on the higher side as well, but 80 to 90 is a range that you could perhaps be looking at for crude oil prices. Kunal, hi, welcoming you on the panel as well. What is your sense on where the crude prices are headed? What would you say is OPEC preempting weak demand going forward in this year?
Yes, absolutely. You got it right there. It's the reason why OPEC took this decision because of the turmoil what we saw in financial markets, and considering that there can be a prolonged slowdown in the demand, and discounting that they cannot afford that oil prices go below $60 or $55. It will be a very difficult proposition, and they know how to manage the market post-COVID, where we've seen humongous big production cut by OPEC. I mean, at the size of 5 million tons, 6 million ton production cut. So they know the pulse of the market. The moment they announce that they are going to cut the production out of a 100 million barrel market, if they are taking out, so Russia and Saudi Arabia together are going to pump less oil by almost 1 million barrel. That's quite a big number in a current scenario where the global oil demand is growing, still at a growing phase right now. And considering everything, 1.7 million barrel production is going to be out of the market. That is quite bullish for oil. And this can lead to a further upside in oil prices in near term. So far, what we've seen from the morning was short covering. And I think even we will be able to see fresh longs for another 4 to 5% upside in oil futures.
Kunal, also, everybody has been talking about 85 to 95 of a range if this current upside just about continues. What is the sense on where could we be ending this year? How are you looking at the Chinese demand coming in?
Well, Chinese demand, taking the second question first, I think the Chinese demand continues to remain good. We have not seen, January was exceptional because of the reopening trade. And even from last 2 months, the oil demand in China is growing at a very healthy pace. So we are seeing strong demand from China, and that is also going to add fuel in the bullish sentiment. Second question, by the end of the year, okay. So whatever phenomenon we are observing, I think maximum, considering everything, WTI for me, peak would be $90 to $94 for Brent, $100. That are very achievable. Beyond that, I don't see any major upside.
All right. So I'm fishing for a number for the natural gas prices also. So even as crude oil prices have continued to do well, at least with the beginning of April, we haven't seen any change in direction for the natural gas prices. Take a look at the month of March and we're down 19%. For the quarter, we're down 50%. For the Indian markets, we've seen the prices come off from 800 rupees per MMBTU to below 200 as well. So I'll come to you first, Anuj. What is the range that you're working with for the natural gas prices for the month of April and for the quarter?
Manshaji, today I just prepared data where I noticed that from March 2022 to this March 2023, natural gas prices dropped down by minus 43%. So this is a very drastic correction in the this commodity, because in last year we saw that commodity test the high of 801 levels, and now it is almost 170. So this is a very fluctuating commodity, and this is unpredictable how this price moved in the natural gas. So now, as far as concern about the demand, see, supplies is very high, demand is still lower. So I'm not expecting a very huge momentum in this commodity in this year. But yes, definitely the current prices levels are very, looking lucrative for the buying side. And I'm expecting that it may test again 250 to 300 in next couple of months. After, June, July, there would be some strong kind of activity, and definitely winter demand will come from the August and October. So might be after 2-3 months there will be some demand. Demand is there, so price will increase and it may test 250 to 300 level in a 2-3 months.
All right. Very quickly, Pritam, what is your level that you see for natural gas?
Natural gas, I think, has got a tough time coming. I think we saw a little bounce yesterday because there was some demand coming through LNG. But my sense is that with weather becoming warmer and the springtime is also estimated to be warmer than regular years, so I think natural gas has got things back for itself. I won't be surprised if we see 140, 150 levels for natural gas. Obviously, there's going to be recovery when come post the spring season, when winter season kind of sets in. But then we'll need to future gaze at that particular point of time. But I'm not overtly bullish on natural gas. I think we still have some downside left in natural gas.
All right, that is one commodity not out of the woods, but crude oil prices is something that the OPEC and allies clearly have taken care of. So that's the new month and new quarter looking like for the crude prices. But with that, we are heading into a short break. Coming up, we shift focus to the other non-agri commodities like precious metals and industrial metals as well, on how this month and the quarter can look for that. Stay tuned.